This house in Seattle, Washington is listed at $749,000, and we're going to be walking through a real mortgage quote to talk about how much your monthly payment would be on this house. Now, obviously, it's going to depend on what your down payment is, so we're going to actually look at two different scenarios. We'll look at a 20% down scenario, where you're bringing 20% down, and a 50% down. Each scenario, we'll walk through a quote showing what your monthly payment would be, how much cash you'll need to bring all in, and then what kind of income you would need, how much income you would need in order to qualify for the loan. So we'll walk through each of those. This is a real mortgage quote. My name is Landon Buto, and I work with Cleveland Street Mortgage. We are based in Bothell, Washington, a local mortgage broker company. We do loans in Washington and Idaho, so this is a real quote, but that doesn't mean these are the exact numbers you're going to get. It's not an advertisement for the rate you're going to get, but it should give you a better idea than just looking at an online calculator like Zillow or something, and it'll also give you, it'll be more reliable, and it will also give you an understanding of why the numbers are what they are and how they might be different if they are different. And then at the end of the video, I'll give you an idea of how to get a quote on a house that you're actually looking at in the Washington or Idaho area so that you can get real numbers based on your finances and have a look at that. All right, so here are the two quotes. The one on the right here is the 20% down scenario, and the one on the left here is the 50% down scenario. And then in order to create these quotes, I had to assume a few things about your financial profile because that will impact your pricing. One of those assumptions is your credit score. So I'm just using 740. So I'll start with the 20% down. And 20% down is an important threshold because if you can hit 20% down, then you don't have to pay mortgage insurance. So we don't have mortgage insurance on this one, which is great. You can see the monthly payment is $4,908. That's going to be your total mortgage payment all in. And that's made of four different components here because we do have an HOA, Homeowners Association due on this property, but it's only $13 a month, so that doesn't obviously make a massive difference. And then these two components right here, homeowners insurance and taxes, are both dependent on the house. They don't have anything to do with the loan structure or anything like that. They're just determined by the house. Homeowners insurance, this is an estimate of $175 per month based on the price point and the area. It should be a pretty good estimate. It should give you a good idea of what to expect for this price point. But it's not an exact number. That's going to depend on who your homeowner's insurance provider is and what your coverage is. So that could vary a good bit, but this should be a pretty good estimate, and it is a pretty common number for what we see come through at this price point in our area. And then taxes of $474. I did pull that from the county website, so that is the exact number for 2024 to expect, $474 per month. And then the last section here, the last component of your mortgage payment is principal and interest of $4,246. And that is just a function of your loan amount, which is we have 20% down, so the loan amount is still $599,960. And your interest rate of 7.625. So interest rates have just gotten higher this week, over the last 2 weeks definitely, and then this week especially. They have gone up, and it is what it is. I don't know what to expect going forward, but that's where we're at roughly right now. You can glimpse over here in the 50% down scenario, we have 7.375. So by getting to 50%, we did improve our interest rate a little bit there. Part of that is reducing the loan amount, and part of that is getting to a higher down payment percentage. So 7.625 is a pretty good idea of what to expect right now. It's not the exact number you're going to get. It's not an advertisement. But at this loan amount, this down payment percentage, all that, this credit score, it's a pretty good idea of where we're at. That's pretty recent. You know, just last week we were still in the low sevens, and here we are in the low sevens for this one. But you know, that's shot up the last week or two, unfortunately. So we'll see what we see going forward. Points or credit, we are showing $204 of credit for this interest rate. Now, points or credit, points are a fee you can pay up front in order to get a lower interest rate. You pay a lump sum in order to get lock in a lower interest rate and pay less interest over time. That's points. Credit is the reverse of that, where the lender says, I'll pay some of your closing costs. I'll give you some cash if you take a higher interest rate. So technically this is $204 of credit, but the way points and credit work, they just don't really price at 0 points. They don't really show 0 points. They don't really do quotes for 0 points. You might be able to get that when you go to actually get your loan, but that takes some finagling, and for the most part they just show close to 0, and this is as close to 0 as we can get. This number, obviously that's $200 and it's not nothing, but in terms of what it takes to actually move the needle on your interest rate, it would take several $1,000s here to even reduce this at all to maybe down to 7.5. It would take several $1,000s to get that down to 7.5 in terms of points, and going up to 7.75 would you would get a pretty significant credit. So this is not a real significant credit. That's pretty close to 0 as far as points go. And then other closing costs here, we have $12,523 is what we're seeing, and that's based on your loan amount. It's based on a lot of different things, okay? But the biggest factors that impact that are your loan amount and your purchase price. So if those change significantly, then your closing costs will change significantly. So we have a pretty large loan amount of $600,000 and purchase price of over almost $800,000. So that's definitely going to be impactful on these closing costs. Closing costs are made of two components. One of those components is costs and fees involved in actually getting the loan and getting the house, paying the parties that help make that happen. And then the other component is what's called prepaids, and prepaids are just costs that you're going to be paying on an ongoing basis as part of your mortgage, but you have to get some of those in escrow ahead of time before you get set up so that the lender can make sure those get paid. That's universal. That's how closing costs work. This number, this number could be, if you're higher than this with purchase price, if you're in the millions, or loan amounts higher, obviously this number could go up to much higher, so it could be closer to 15,000. It varies a lot depending on various things, but generally for this realm of deals, this purchase price, this loan amount, you're probably going to be somewhere between $10,000 to $13,000. So that's a pretty good estimate. Estimated cash to close is your down payment plus your closing costs of $12,523, and so that ends up being $163,623. So again, you are probably not a first-time home buyer. You're probably selling a house that you have some equity in to be able to get to this point where you have that amount of cash. This is not primarily intended. Maybe you are a first-time home buyer and you just have that kind of assets, and that's great. But this is probably mostly going to be people who have a house currently and are selling that and have some equity to bring to the deal. So we'll talk in 1 second about what income it would take to qualify for this loan, but first I want to walk through the 50% down scenario, and then we'll talk about the income for both. The 50% down scenario, you got your monthly payment down to $3,251. And again, this is an estimate. It's not the exact number, but it should give you a good idea. Again, the homeowners association dues are $13 a month, taxes of $175 a month. Insurance of $175 a month, and taxes of $474 per month. All of those are not changed at all because they're dependent on the house. They are not dependent on the loan structure, the down payment, any of that. So all of those are the same. And again, this is an estimate, but it should be a pretty good estimate. It's a pretty common number for what we see at this kind of price point in our area. This, though, taxes of $474 is that's the exact number drawn from the county website. So that is the actual number for 2024, and you can kind of lock that in. Principal and interest then is $2,590, and again, that is based on your loan amount of $374,975. We've gotten that loan amount down significantly. And your interest rate. Interest rate went down a little bit to 7.375%. because we were able to make it to 50% down and also reduce our loan amount. Again, those are relative to the last few years, painfully high. Be curious to know in the comments where you're at if you own a house currently, what you were able to get into, because this is obviously relatively higher than the last few years. But if you what you hear from people who have seen the industry for a little while is this is relative to the last 20-30 years, definitely on the lower end. So it's just all a matter of what your normal is and what you're used to. But we will see where things go. Again, I'd be curious to hear where you think interest rates are going in the near future. Points or credit. If you skip to this section at all, then you can pop back here if you want to hear more about why this number is what it is. So technically, we are getting a $735 credit to take this interest rate. So the par rate would be a little bit below that because we're getting a credit from the lender that goes towards our closing costs to take this rate. But again, it would take several $1,000s either direction to make a difference on this rate. So that's not a super impactful number. That number could be several $1,000s in order to make that needle move at all on the interest rate there. Other closing costs, $11,248, and that went down a little bit because we have a lower loan amount. We have a little bit more of a credit here, and lower loan amount means lower closing costs. So $11,248, and then total cash to close of $387,333. Obviously significantly more cash to close because we're at 50% down rather than 20% down. So how do you know if you would be able to qualify for either of these loans? If you came to a lender and said, I want to get a house and here's the cash I have to bring, $387,000 or $163,000, would you be able to qualify for this loan? Would you be able to buy this house if that's your situation? How do you know? Let's walk through that, and we're going to talk about your income. What income would it take to qualify? So the way that lenders determine whether you can qualify for the loan is they look at what's called your debt-to-income ratio, your DTI. And your DTI is your total monthly debts over your gross monthly income. And this number needs to be less than 50%. Okay, so this number right here, your total monthly debts, is your new housing payment that would result from this loan. They say, okay, if you were to do this loan, here's the housing payment that it would be. And that number goes on top, plus any other monthly debts that you have. Credit card, student loan, car debt, any other monthly debts you have. And they add that all together, and then they divide it by your gross monthly income, which is your income before taxes, and that number needs to be less than 50%. But the tricky part is this number isn't always as straightforward as it might seem. If it is salary, if you are paid entirely or almost entirely in salary, then that's just the number. Then that's going to all be usable. You can use that number right here, but not always is all of your income usable. So for example, if you are in sales and you make mostly commission, or if you work variable hours and your hours aren't the same every week, or if you are self-employed and you own your own business and your income changes every year, then not all of your income is going to be usable. So the lenders have different ways of calculating that kind of income to figure out whether they can use it. And so that can be pretty tricky. You can definitely look up resources on that in figuring out how much of your income will be usable down here. But at the end of the day, the best way to figure out that number and figure out how much you can qualify for is really just to talk to a loan officer, because these guidelines are not very straightforward on figuring out what income will be usable. So it's really going to be most helpful at the end of the day just to talk to a loan officer. But that's how that number is determined. And so assuming your income is usable, or at least the needed amount is usable, and assuming you have no other debts, we can figure out how much income would be required to qualify for each of these loans. So 3,251, that needs to be, let's assume you have no other debts. That the income in order needed to qualify for this loan would need to be a little over twice this amount. So you would need 6,502. Did I get that right? Yeah, 6,502 per month in order to qualify for this scenario. And in this scenario, you would need 8,000, 9,816. Let me double check that. Yep, 9,816 per month in order to qualify for this loan. Now, two notes on that. Again, that would have to be income that qualifies. So if you are largely in commission and you just started getting up to this point where you are making 7,000, 8,000 per month in the last 6 months or a year, then you might not be able to qualify for this, even though you know you're making 7,000 or 8,000 per month. Even if you know you're making 10,000 per month and you just started getting to that point in the last 6 months or a year, but before that you were working a different job, or you were making much less, you were closer to 4,000 per month, then the lender might look at that and say, yeah, no, we can only use 4,000 per month, even though you're making 10,000 per month, based on your averages over the last 2 years or something like that. So there are various ways that they actually figure this number out, but whatever they figure out needs to be the number that they use. So 6,500 per month to qualify for this scenario, and 9,816 per month to qualify for this scenario. And that could be, if you're applying for a loan with your spouse, that could be your combined income. That's great, as long as both your income qualifies and is usable. Now, this is not a reference for a budgeting decision. This is not saying you should take on this payment if you make this much. This is not saying you can afford this payment if you make this much of 6,502. This is just saying if you came to a lender and said, I make this much, or came to a lender and you showed them your pay stubs or your tax returns of the last few years, and they said, okay, yeah, we see you make this much, then you could qualify for the loan. That doesn't mean you should take it on. It's not financial advice on that. So that should give you a reference of how lenders figure out whether you qualify for the loan. Let me know definitely in the comments if you have had an experience going to apply for a loan and you had made way more and the lender didn't qualify you for that, because there are always tricky income scenarios, new income scenarios that can be different every time. So it's interesting to hear about those. If you are interested in getting a quote on a house that you're actually looking at, or if you just want to reach out and see how much house you could qualify for, how much of a loan you could qualify for, or just start asking questions, please do reach out. All our contact information is in the description below. Again, I work with Cleveland Street Mortgage based in Bothell, Washington. We do loans in Washington and Idaho, and we love working with new clients. You can check out what it's like to work with us. You can read client reviews, and there's a video showing what our process is like, and if that looks like it would be a good fit for you, please do reach out. All our contact information is in the description below, and we'd love to work with you.